Hey guys, Brad Bob here, talking about another federal retirement issue that's really a hot topic right now because of the changes in the federal long-term care insurance program. And one question that a lot of people are debating, and really anybody should be looking at this, is can I self-insure for long-term care? Do I need to get insurance to cover the risk? Okay, that's what insurance is taking risk away from you and putting it on an insurance company. It's just switching the risk to a company versus taking on yourself. Car insurance, life insurance, that's what insurance is. So, can you self-insure? All right, great question. Let's talk about that for a minute. I've talked to people all across the board here, and I talk to a lot of people that have long-term care insurance that actually can self-insure and can afford to pay for it out of pocket. Now, even if you can afford to pay for it out of pocket, that doesn't mean you shouldn't have insurance. It means you don't have to have it, but yet you still may want to have it, okay? That's up to you, and that's a choice for you to make. But I just want to look at a couple of different scenarios here. This is a scenario I come across quite often, is you got a single person who has their first pension and who has Social Security income, and then they're going to have investments in their TSP as well. But I actually just talked to somebody today. Single lady has long-term care insurance. Well, while I appreciate her responsibility, being responsible, I asked her why. Why do you have long-term care insurance? Well, she doesn't have a spouse. She doesn't have any kids. And she really doesn't have anybody that's going to depend on her income or needing her assets. So long-term care typically is designed to protect a person's assets or a couple's assets. Well, and that's so that when the one person dies, they don't disinherit the community spouse, or the person, still living, not in a facility, or so they don't disinherit their kids. Some people are concerned about that, others don't. But so in her scenario, she's paying for long-term care, and she just got this premium increase, and she's realizing, I really don't know why I have this. I don't really need it. And in her case, she can probably pay for it anyway without much of an impact at all to her assets, because if she needs care, she's not going to need a home to live in, so she can sell her home, okay? And then she's got a FERS annuity of $3,500, Social Security of $2,000, so we're looking at $5,500 a month she has right there in guaranteed income coming in without any investments. Last I looked, national averages are somewhere from $70,000 to $100,000 a year for long-term care. So $70,000, that's $6,000 a month. So she's just short of that. All right. So in her case, not really a need for the insurance. I would guess that she's going to drop it. Okay. Now let's talk about another common scenario that I have. And I know that I'll have people see this and say, oh, those numbers are crazy. Well, they're not crazy. I'm sure I understand that they're high compared to some situations, but I talk to a lot of people in scenarios like this. So scenario number one, you've got a married couple, okay? And this is not uncommon at all to have a married couple with a FERS annuity of $3,000, Social Security $2,500, FERS annuity, the other spouse has FERS annuity of $2,500 and Social Security of $2,000, okay? That is what I call a pretty good retirement, okay? Guaranteed income of $10,000 a month. And they're looking at long-term care insurance. Now, the majority of people that I talk to in a situation like this can afford to self-fund their long-term care. They typically have some investments as well. Might have a couple $1 million in TSP, and they could afford to pay for their long-term care out of pocket. All right. Another scenario that happens, and this one isn't as common, but it happens as well. You might have a law enforcement officer, air traffic controller, and they can have pensions even higher than this, but and quite a bit higher. But $5,000 FERS annuity, okay, we've got a little bit higher numbers here. They have a $13,000 monthly income. So in that scenario, then a lot of people I talk to in scenarios like this, they don't necessarily need their investment income. Therefore, they can afford to use that should they need long-term care and be able to pay for long-term care. But let's say one spouse dies, okay? So one person needs long-term care. Let's say it's this one here, making less money. $3,000 first annuity, $2,200 Social Security, okay? So this person is going to step up to $2,800 in Social Security because of the way that survivor benefits work with Social Security. Okay, step up from hers, his to the other spouses. Then, if this spouse took the full survivor annuity, okay, so this $3,000 plus $2,800 plus $2,500, okay, in a survivor annuity. Okay, so now the living spouse here has income of $3,000 plus $2,800 plus $2,500. Okay, so we're looking at $6,300 of monthly income for the living spouse. Okay, so if this spouse passes, then this spouse is around, and this spouse has $6,300 of guaranteed monthly income. Okay, and if this spouse needs care, does not have a spouse around that you need to protect assets for, you've got $6,300 of monthly income to be able to pay for care in a facility. That takes you up to $75,000 or so. That's quite a bit of money to pay for care. All right, and that's not mentioning any assets again. But this is just a conversation I want to have. It's something that if you're thinking about long-term care, you should think about. Federal employees have pretty good retirement system, all right? And law enforcement, public safety officers, even better. So some people have some pretty high first annuities. If you work 35, 40 years, you're going to have quite a bit of Social Security income. And then if you have a working spouse in the house as well, now we're talking about double the income, okay? So a lot of federal employees are going to have a significant amount of guaranteed income that they could use to help pay for long-term care if needed. All right. So can a federal employee self-fund their long-term care? Maybe. I've talked to an awful lot of federal employees that can. Okay. So something to think about when you're considering keeping your long-term care insurance or not, whether or not to take the increase in your premium to have that higher COLA. I believe they give you 3 different options, whether you drop it, whether you take the reduced COLA and keep the same premium. So a lot of choices here. Evaluate all your options. And if you want some more information on long-term care, federal retirement, you can visit my website below. And I'll also post a link to an article or two about long-term care insurance below. So, hope that helps. Thanks.